and everything's pushed up. What do you think, Tim? Apple finally broke that ridge it was on it on the 3rd.
Yeah, it's up to 148.29, making new highs. So finally,
148.05 on the 3rd. Interesting. Welcome everyone to Thursday, the MMT Live Investment Show. We come here every Thursday to talk about the market, what's going on, and then dive into specifics of how we can become better traders, how we can interact with the market in a way that's effective, that's consistent. We answer as many questions as possible, and then I'm sorry, we're a little distracted today. So Joe will not be joining us today, as usual. He broke his leg this morning. So he is in the hospital and probably going into surgery, you said, Randy?
Yep.
So that all happened this morning then, right?
Yeah.
Wow.
Yeah, I believe so. I heard there were some groceries involved, and
I think I thought it was yesterday afternoon.
Yeah, I think it was yesterday afternoon, but he's in the hospital today.
Yeah.
Gotcha.
It must have been painful overnight. He's probably going, man.
Yeah. In fact, he may be in surgery right now.
Yeah. Should be.
Gotcha. Yes.
Mend that femur.
Yep.
You never know. He may come out being the bionic man. You know.
Yeah.
Yeah.
I feel like that Star Trek stuff nowadays. Yep.
Yeah.
And we need to acknowledge today's his birthday actually too.
Yes,
so
It is. That's right. Today was his 78th birthday.
It's not the best way to celebrate your birthday.
Yep.
But
imagine the story he's gonna tell and how he's gonna tell it.
Oh yeah.
Yeah. We were saying, Tim, we also wouldn't be shocked if he just popped online anyways.
Right.
Joe was not one for blood and guts or even hearing about blood and guts, so we open wish him well there.
Yeah, absolutely.
Yeah. Yes. So, and then at the same time, we have Keith on as our guest.
Yay.
Sorry for the tumultuous situation in which you're here, Keith, but we are glad you are. How's life on your end of the country, Keith? Give us 30 seconds. I know you're on the podcast that often, so give us 30 seconds to viewers who may not know you.
Yeah, I'm in Maryland and hot and steamy here this week, and it's supposed to be up mid-90s today and a little toasty. Anyway, but doing well here, and for those of you who were at the master's class, it was great to see everyone again and meet some new faces, and it was just a very enjoyable time for me, and to be able to share some of the trading that I'm doing. So I appreciate the chance to be able to do that.
Absolutely, we're glad you're here. Joined also by Randy, Mark, and Tim. They are our daily coaches from our various techniques that range over time spans. So we try to structure everything in a way that has a spot for everyone. Everyone's in coming into trading in a different situation, needing a different time frame or intensity to trade with. So we have trades that are 30 seconds to 30 days. Well, I don't know if the covered calls go that long. But yeah, not that's
very few that go past a week right now.
Yeah, I guess with how volatile it was, I was like, we're probably actually not pulling anything that long. So, but yeah, Mark and Tim are on our MMT, and they do the quick trading. So it's anything about, what would you say you're averaging right now, Tim? A minute and under trading?
Oh, absolutely. Yeah. More like 30 seconds these days.
30 seconds. Yeah, again, increased volatility brings to quicker outs. which I want to highlight. That's not so much an accidental thing, right? When the volatility goes up, our time does go down.
Mhm.
The reason for that is our rules don't change. If our rules changed, our time frame would be the same, and our returns would be bigger, right? But that's not how it goes. Time is kind of the variable, the most flexible variable. I mean, how would you explain that, Tim? What is there? Is there a kind of a priority list in your trading?
Yeah, I mean, our rules are pretty tight. You know, we get in, we set a sell to close for, anywhere from 3 to 5 cents, and try to close that as quickly as possible to preserve our gains as quickly as possible. So when we're in a period of higher volatility, we know we have more reversals. So just to be extra cautious, we get in and out a little faster. Knowing that we can always re-enter that leg of the trade if circumstances warrant. And now there are, when we have less volatility and we're seeing a longer leg of a call or a put, we may stay in a little longer because we're not experiencing those sudden pullbacks. But our rules pretty much never change in terms of what we do.
Yeah, absolutely. And then Randy, you teach a lot of our techniques that are controlled in the sense of multiple outcomes. The way I kind of explain it to people is it's not so much a trade, right, as we know it, whereas it's a buy and then a sell. There are a series of techniques that you employ depending on what situation comes about.
Yeah. A couple of things. Number one, I was slightly distracted here at the open because I just did my micro moment trade in and out of the SPX put.
Very nice.
For my 4.3% return so far for today on that one. While Tim was talking, so it was it was an excellent. I mean, almost a textbook setup. Right there for put entry in, and now it's coming back up. So that's it's just great. So I do some micro moment trading. That's not my focus every day, but I still get some of those in. Tim and Mark are the experts on that. But I teach two different of our techniques. One of them is a longer term micro moment trade, like what Tim and Mark do: buy the call, wait for it to go up, and sell it. We call that momentum trading, and we use instead of using the intraday streaming chart that Mark and Tim use to see changes moment by moment in the market, we use the daily advanced chart, which looks at the days as opposed to the minutes. And I teach that on Mondays, and this Monday we entered a position on JP Morgan and closed out on Tuesday for a 7.2% return. So that one is just buy the call and then sell it for a profit. But the majority of what I do in the larger technique that I teach is the synthetic cover calls on Wednesdays, and that's, I think, what you were pointing more to is that's not buying and selling. It's entering a position which we call we don't just call it's called a covered call, where we buy along and sell a short against it with the full intention of letting it go to expiration and being called out. So we don't have to after we enter the position, we don't do more buying and selling. We just let it go. Our construction, based on the charts and the rules that we have, and everything we teach is rule based. You learn the rules and you follow the rules. But the construction is to be deep in the money to increase the probability that we will be called out, and that's the desired outcome, and that will be called out So being deep in the money, the stock can go up, we're going to get called out for sure. The stock can go sideways, we'll get called out for sure. The stock could even drop and we can get called out. If it drops substantially, if it drops a lot, then we have the management techniques that allows us to continue to manage in for additional profit into the next week to then get called out the next week or 2 weeks or 3 weeks, depending on how long that it takes. So last week I implemented 10 different positions. 9 of them were called out as we want to have happen, and one is managed into this week, and it is deep in the money right now, and more than likely will be called out tomorrow. So then all those positions will have been closed out from last week. This week so far, all of the ones that I've entered are in the money. There's no guarantees they're going to stay that way, and it's almost like when a pitcher is pitching a no-hitter, you don't go up and tell him, hey, you're pitching a no-hitter, keep it going, because the next batter hits a home run. So the same thing when I'm analyzing and looking at I don't like to forecast what's going to happen tomorrow because things can change dramatically. But by implementing position that's deep in the money, it allows for the almost, well, hourly fluctuations in the market these days. It's up and down and all around, and usually finally it ends up a little bit higher, kind of miraculously, because there's so much money out there. But we're not speculating. We're not counting on it having to go up. We choose positions that are likely to go up based on our charts and our analysis, but they don't have to, and we still get called out. And being called out means you get all your money back and you lock in a profit. And that's the goal of the cover call. So it's not as nerve-wracking or as exciting or as moment by moment critical as Tim and Mark do, because the positions usually last for 3 or 4 days into the week. And so it's a little bit slower pace, but I think it's still pretty exciting compared to just buying and holding. You're just watching something. So it's not an investment to just buy something and watch it grow forever. It's a income generation technique. Just like going to work and getting a paycheck every Friday, it's like that. We're working in the market and we're generating income on a weekly basis. And so that every week we make money for the new week. We make money. And if we decide that we want to go on vacation or something, we don't have to do anything. We try to get back to cash, and then we wait till we want to re-enter the market again. So it's fun.
So Randy, so when you say deep in the money, I'm sorry, Randy, just for deep in the money, when you say, what does that mean? I mean, are you looking to go a certain distance or make a certain profit percentage, or what do you do when you pick that strike?
Yeah, well, deep in the money, in the money means that the strikes that we select are lower than whatever the stock price is. That's what in the money means for everybody out there that may not be quite familiar with the options. So take in case, let's look at one like UPS. UPS is trading at 193. I have the 190 call that expires tomorrow, that as long as it stays above 190, I will get called out. I'll get all of my invested capital back and lock in about a 7 or 8% return income, actual extra cash that'll be left over in my account. If UPS drops below 190, which it could, then I would implement the management techniques and move it into next week and at lower strikes, actually, to make it be even deeper in the money and generate additional income. So last week, 9 out of 10 were just closed out in the initial week for all the capital returned and returns locked in. And those returns ranged from, I'll just go back to my notes here, they range from a low of 3.9% for the week up to actually 56.2% for the week. I actually had another one that was 42.8% return for the week. Those are kind of on the outliers. I mean, normally
That's a little
normally
bit.
I'm normally looking for 8-9% return for the week on the invested capital. And these, I call them synthetic covered calls. So in the typical covered call that we teach is you buy the stock and sell a call against it. And the call gives the right for somebody else to buy it back from you at a set price. They pay you money for that right. But instead of doing that, I teach a synthetic covered call process where I buy an option that gives me the right to buy the stock at a set price, and then I sell an option against it. So it leverages my capital in that I don't have to have, like UPS is trading at 193. I don't have $193 invested. I have $4 invested.
Yeah.
So I generate income on the $4 and not the 193. It allows me to have a whole lot less money in the market. So I like that, to have less exposure to this highly volatile but continuing to climb market. But still, there's some pretty exciting days.
Yeah.
But less capital out there and get a great return on that capital.
Yeah.
Nice.
I think that foundational structure has been, kind of changing for everyone. There was a kind of a balance struck before, right? And I don't know what I'm saying before, maybe before 2020, I think the market pretty drastically changed. But your priority list, especially on exposure and how much you had involved due to volatility on a micro, like daily scale, but also on a macro scale. I mean, things are evolving very quickly. They're changing very quickly. So some of these exposure models that we work off of have changed a bit too. Let's get to Keith here, because I mean, this is pretty directly what you're chatting about, Keith. What kind of changes have you seen in the market? We can start there and then take it however you'd like. But with mainly the effects of COVID on the market, are there any kind of changes that you've seen that when you're talking about diversification or you're talking about how to balance strategies, has there been changes in where you put a bulk of your money or changes in allocation that you focused on due to increased volatility specifically?
Yeah, Micah, the trading that I used to do a lot, almost solely, was credit spread trading, where you're buying and selling options for typically out of the money that you don't want to go in the money on that approach. And but with the up, and you can trade up and down markets that way too. You don't have to just trade up markets.
Yeah.
But that really changed probably about 2 to 3 years ago, even before COVID, that it was just, you were having to take such risks to be able to get nominal returns, like 3 to 4% a week kind of returns on these, that it just wasn't worth it. And some of my normal engineering job changed a little bit, so I couldn't spend much time addressing other approaches. But more recently, starting at the beginning of the calendar year this year, I started looking at other approaches, both doing the micro moment trading with Tim and Mark, and doing the Dow of the Dogs trading to be able to get dividends on stock, as well as doing covered calls that Randy teaches on that. And then I'm also looking at doing some of Randy's, following some of Randy's momentum trades that he's doing using his modified CPR positions. But I also got back, because back when I was doing covered calls, I really was getting into momentum tradings using the CSM charts, or the credit spread momentum charts, which I developed when I was doing the credit spread trading. And so I've really started looking back at that, and more recently, in the last, just since I came back from the Masters, I've done 8 trades on that. And totaled 75% return on that on the 8 trades.
Wow.
So
That's fantastic.
averaging about 9% trades on that. So, and I can do that and the micro moment trading, because micro moment trading really is more at the beginning of the day, and so that's
Yeah.
what I do on that. But the other ones, I'm holding a little bit longer. Now, on those 8 trades, I averaged about a third of a day trade, so maybe 3 hours in a trade, and I'm shooting for, in the past, I've had some of those that have been 75 to 100% return. Now, those are, again, as Randy said, those are outliers. And particularly with the volatile market right now, if I can get 10% being in that for an hour to 3 hours, man, I'm taking it and I'm done. I'm back in cash. So, so with respect to allocation, I want to be back as cash as soon as I can, and particularly over the weekend, if possible, be back in cash and not have to worry about it. I would say the allocation per trade is probably down just a little bit, just to be cautious from what I'm trying to do, and not shoot at the moon on these things and home run each time. And if I can do that, if I can get to 25% a week, and that's 100% a month. I mean, come on,
Gee, hey, is that all that you shoot for? Come on, Keith.
You don't need to trade that much to be able to have fantastic returns and have a life besides trading too. Now, I grant that some people love just to be trading all the time. Man, I'd be at my workshop making stuff. And so anyway, so that's sort of the approach that I've been trying to take, a few different techniques that don't conflict with each other time-wise, and still allow me to have, I think, fantastic returns on that.
Absolutely.
Yeah, I would say those are pretty fantastic returns.
Yeah.
It's
But see, that and that's one of the topics that Keith covered at the Masters seminar, which we had last month, was the diversification of your trading with different kinds of techniques. So I do all the different techniques. In fact, I still do some credit spreads every week. Keith used to teach those. So you can learn multiple different techniques that do different times of the day, different time frames as far as how long you're in and out of stuff, different amounts of concentration that you have to have, and how often that you have to pay attention to the market. There's a wide range of those that we teach, and so you can pick and choose. You can do multiple ones during the week. You can find the one that like best fits the market condition at this one moment, and kind of spread out your not only diversification of the sectors that you're investing in, but also what types of processes that you're using.
Absolutely. There's something for everyone to learn, and just pick the one or two approaches that fits you best, and just concentrate on it and be good at it.
Yep.
Yeah, absolutely. The time it takes to refine that to understand how your personality relates to that style of trading, I think, is something that we talked a lot about at Masters. I talked a lot with individual clients that were already doing certain techniques, and they talked about how they were in other techniques, and some of it was just schedule and job change, but others were, my brain is built to this better, right? It just is more comfortable for me to be in this time frame. And that's a conversation we've started to have recently, is how can you kind of not just say, okay, what's going to make me the most money the fastest? I'm going to go do it and overtrade myself into the ground trying to do that thing, right? We're talking about how to be effective and sustainable, right? Effective is one thing. Sustainable and consistently sustainable is another thing. And we're coming into this concept that also requires it to fit with you and fit with your personality as a trader, who you are. Let's answer a couple questions here.
Before you do that, though, let me make
Please.
one other comment, particularly for those new to this. The instructors here, Randy, Tim, Mark, are just outstanding instructors to teach these techniques, and you can virtual trade it till you learn it. So you don't have to lose any money while you're doing it. So, yeah, take your finances into your own hands and be able to do this. It's a great way to learn and do that.
Yeah. Absolutely. Jim says, what platforms do you use in order to get in and out so quickly? We have used quite a few, but let's just round robin it. Randy, what do you use on your shortest term trades? What platform are you using?
I use Swap Street Smart Edge for my SPX trading. I also have E-Trade Pro or Power E-Trade. I think it's called Power E-Trade.
Yeah.
Both of them work just fine.
What tool? I know that some platforms have like active trader ladder and then limit orders that are adjusted. What tool do you use within that to execute your fast trades?
I just do limit orders.
Limit orders.
I don't use all the fancy conditionals. What if you do this and that and the other? I just like to look at and control my own. I put an order in to buy. When I buy it, then I put an order in to sell. It takes 10 seconds to put the order in. So it's SPX usually doesn't move quite that fast.
Yeah.
So, so 10 seconds is fast enough for me.
Tim, how about you?
Yeah, I use Thinkorswim, and like Randy, I just have it culled down to about the simplest way to do it. I use a quick key in and a right click to get out. Of course, we use limit orders, and just keep it simple.
Mm-hmm. And so it's a mouse right click or.
Yeah, well, there's a quick key entry, hotkey entry on Thinkorswim shift click that we can show anyone how to set up that bypasses all the verification pages that they put up and execute your trade as quickly as possible. And,
that is one thing I will say there. The confirmations have a lot to do with it. Now you want some confirmations, especially if you're doing some longer term positions or things that are more of an allocation. It's nice to have an OK button in a different place that you got to go, make sure. If you are on top of it and know what strike price you're on, and you're going to be in it for 30 seconds, doing less confirmations can be more efficient. But you have to be on top of it because it's not, if it's the put and you mean the call, it's going to get you in the put, and you have to know that it's not the call. And I've done it before. Like, don't get me wrong. It has happened. And then, holding true to your rules as well. Obviously you weren't meant to be in that trade. So the second you realize, well, let me look at the chart again. Maybe I was wrong. And it's actually, don't just, correct mistakes instantly and move on from there. So it's kind of a give and take with confirmations. Keith, where are you at on platform?
Yeah, I use the Schwab Street Smart Edge also for that, and you can set it up so you bypass the confirmation stuff so you can get in and out very quickly on those. I've also opened a Thinkorswim account just to try it virtually on some paper stuff, and I just haven't had much time to really play with it. I did it a little bit last week on that, and so I might try that too, particularly for my slower trades. The Street Smart Edge is a great platform. I really like it. It's easy to do, and it performs very well. I can do trades very quickly on that.
Yeah. Is it a nice for the slower term trades? What do you look for? Are you looking for just a nice visual structure on your page? Like, what's the best for you on the slower trade?
I have my trade set up so I have the option chain set up. If it's just like buying the long call position or the long put position, and I can enter a trade just by clicking on that price and then in you go. It's that quick.
Yeah.
Nice.
And I also have down in the right-hand corner, they also have a charting tool, sort of like it's not as good as the 1 minute chart that we use for micro moment trading, but sometimes my CS or my micro moment charts freeze. Yet, so I can watch that other chart, and if it's moving and my other thing isn't, I know I need to reset my MMT charts.
Mhm.
So I keep that one down there always in the background going also.
Yeah, and I think that's a great tip, Keith. Is I keep a just an underlying chart up on my Thinkorswim platform just for that very reason. I don't want to be caught. There's technology that's out of our control, and I do not want to be caught in a trade without having eyes on a chart.
Yeah.
So I keep an extra one up as well.
Yeah, exactly. And I mean, there's all sorts of levels of that too. I've been in trades where the Wi-Fi's died, lost power, the computer itself just, X, Y, or Z. It's great to have those verifications in place and those kind of checks and balances to keep you in the right place during the market hours. Yeah. Mark, what platform are you on right now, and how are you liking it?
So I use Thinkorswim and Interactive Brokers, but I prefer Interactive Brokers. They have a thing called the Book Trader.
Okay.
IBK is called the Book Trader. And basically, it's much like a level 2 screen. And then from there, I use that same kind of screen on Thinkorswim in a little different variation because of how they have their platform set up.
Mm-hmm.
But allows you then to click and buy right off of the scrolling prices essentially on that options chain. It's very quick, fills very fast. I like it.
Nice.
Yeah.
And
Yeah. Mark, I'm going to have to show me. I'm sorry.
Have you been using the ladder at all, Mark?
The ladder. So we're doing futures. There is a ladder that's more efficient, or if you're trading stocks, you can use a ladder. Active trader, say like on Thinkorswim. And so this Book Trader is much like a ladder, right? It has a bid and ask on each side on the options chain, and that way you can actually see the volume of contracts out there and the best pricing, and you can jump on those and click and buy, and it happens pretty much instantly. It's pretty fast. So
is that in TOS or IB?
That's an IB.
Okay.
Now in IB, it's the same thing. If you set it up for that single click, basically you can click I've shown you before on that level 2 screen with the options chain. So if I know about the strikes where we're at now, I can put that strike up on that level 2 screen, and then I have a bid and ask, and I can see the price scrolling, and then I can just click on that to buy or sell as well. It just creates more visual for me, with the charting, everything, the options chain, a faster method to go in there and grab something and get in and get out.
Yeah, you're gonna have to show me how you have that set up.
Yeah, I've got that software now, that Camtasia, and I'll show that. I'll get a recording and put that together.
Cool. Yeah, that'd be awesome, man. Thank you.
On my list of things to do. So.
Nice. Pat, was wondering earlier if you were placing trades when you were looking over at your screen there.
Of course.
Oh, I'm just monitoring it. We're at pretty low volume right now. Price movement is pretty thin right now, so just keeping an eye on it. That's all. We've moved into new highs on Apple. It can be hard to continue pushing up past that, but we're keeping an eye on it. That's all.
It even has a tough time going down. It kind of like has this stasis field that enters. I don't know.
Yeah, Apple's entered its daily real tight price action range that it gets into daily. People are starting to go to lunch and do other things, and it'll get more active this afternoon, undoubtedly.
Yep.
Although SPY has been pretty active all day. It's had some real good movements.
Oh yeah.
For our SPY traders.
Marion says, "Hi Jim. I use Street Smart like Randy, and also TradeStation too. Like them, simple buy to open and sell to close, setting my limit orders as well." Yeah. That was the other one I was going to mention is TradeStation. Especially if you have a background in programming, I'd recommend it. Even if you don't program on it, So to clarify, there's something called Easy Language on TradeStation, and it's a native language within the platform that everything is preset, and you can write from scratch or you can modify code that is, I mean, you can modify order entries, indicators, stops, confirmations, like anything. Now, if you're inexperienced or on the wrong side of that, it's an endless void that you'll get lost in. Don't do that. But if you understand kind of the backside of a computer and what goes on, it's incredible. Also, it's just a great platform to enter a trade quickly. There's an active trade ladder. There's hotkeys, one clicks. There's a 2-click order entry method from the option chain itself. You can exit from the order screen, from the option chain, from the chart. You can chart trade, which is neat. You click above or below the current price to do different things. There's little windows. I mean, you can enter a trade probably 18 different ways. So I will say I've gotten lost, and my trading even suffered for a bit because I was so wrapped up in trying all of these different methods and things like that to explore the platform. So it is kind of an extensive platform, but it is really good. It has signal lights to let you know whenever you're out of sync or whenever your data gets delayed, anything like that. So keep it simple and kind of focus on one thing at a time. But TradeStation is pretty decent as well.
Yeah, Micah. One thing, kind of, there's kind of a difference between the old school brokers that 20 years ago, they basically just were there to buy and sell stocks. Options were not a big thing. Then there's the new trading platforms that basically were designed for options trading.
Yeah.
If you have a broker that's not kept up with the options trading side, their platform may not be quite as conducive. So like Schwab is an old school, but they bought Options Express, which was designed for options traders.
Yep.
Right.
Which
I think the E-Trade originally was Options House and Trade Monster, and that kept getting rolled up into E-Trade. Those were all designed from scratch to trade options. So if you have a broker that really specialized in stocks and hasn't revamped everything that they're doing to focus on options trade, then it may be a little more cumbersome to do options trading there. So I know Jim is saying that he has Fidelity. Fidelity is one of those old school, and I don't know what their platform is. I haven't ever used it, but it may not have kept up with all the options trading stuff and made it really quick and really intuitive to be able to trade options.
Yep, absolutely. And some of those updates come about without a great awareness made of them. Like the platforms don't do a great job of saying, hey, you can do it this way now, and here's actually how to do it. So also, whatever platform you're on, if there's something that kind of feels like a hitch and kind of feels like, well, it's kind of just chunky, it's cumbersome to do this task on my platform, there might already even be another way to do it, right? So check into that platform. There's all sorts of things, learning material on that. We cover as much as we can versus what we do in our dailies, but platforms are constantly changing. And another one I'd like to mention for beginners specifically, and it was like that, Randy. They came from maybe it was TradeStation. One of their guys defected and made his own platform. I forget what platform he came from, but he made Tastyworks, and that is it was started with options and built for options.
I think he wrote Thinkorswim. I think he was the original developer for Thinkorswim.
Yes.
And then he sold out of that and wrote Tastyworks. And so Tastyworks is totally geared towards options trading.
Yeah. Yeah. And user friendly. Like it is the simplest, most approachable, but still very effective platform I've seen in a long time. And one thing we ran into a ton early on that most platforms are starting to account for is that when you're in the near term, right? So I'm watching this this 149 Apple call, right? And it changes. We're at or 147. Let's look at the 147 call. It's a 171. Well, I guess we're very slow on Apple right now. But it changes very quickly. I mean, you can have quite a few cents in each second, especially at market open. Things are moving very rapidly. So when we started MMT, we kind of had this issue where we had to adjust our limit in real time and click to get it synced up, but it was constantly moving. And then once you confirm click and make that confirmation, by the time you get through that process and your limit actually sends and then it gets in line, you've moved again and your limit doesn't fill in the first place. So that process of how your entry price adjusts is a very good way to kind of gauge a platform as well. TradeStation, Tastyworks, has a floating limit. So it will just float with the ask so that no matter where you click it, you're already at the right price when you send that. Yeah, very neat. Hey Keith, do you do CMIC anymore? From Pat.
No, that's the conservative midweek iron condor. That's a credit spread trade, and I'm not doing credit spreads. Nope. Sorry, Pat. I know Pat followed me for a long time doing those, and you just had to get so close to the money. For me, it just wasn't worth it. Wasn't worth the effort. There were better ways more efficient ways to make actually better returns, and not that I'm trying to again hit it out of the ballpark, but it was just easier way to trade. So I really like the momentum trades and the micro moment trading right now.
Yep, absolutely. Eric says Fidelity is designed for buy and hold strategies and company research, reliable but not fast, not great for options. TradeStation is great for options, except their option contract charges 60 cents per contract per trade per direction.
Yeah,
per
leg. Yep.
Yeah, so it's actually $1.20. It's selling.
That's expensive. That's on the very high side of charges.
Yes.
For what's available out there on the other platforms.
Exactly. Yeah. Like technical indicators wise and everything like that it's effective, but it is so expensive. And that's another reason I mentioned Tastyworks a lot, especially for beginners, is it's $1 in. There's no out fee. So in other words, it's 50 cents. Like if we're talking in comparison to TradeStation, it's 50 cents per way, but per contract, right? So now it's $1.20 every contract you go up. On Tastyworks, it maxes at, I think they probably changed it, but it's around 10 contracts. So you pay about $10, and then there's some minute little fees, but they have an options contract cap basically where they start off about on par with everyone else, and then once you get over a certain number of contracts, your commissions just don't go up.
Yeah, they say on their site our customers never pay more than $10 per leg.
Yeah. Right. So
yeah,
you're
no matter how many contracts.
Wow, that can be huge.
It's nutty. I'm serious, Tim. It's crazy.
Especially wow. Tim, for the size that you do, Tim.
If you're doing
you might look into that.
Yeah, no kidding.
Yeah, check out their fills. They're a little bit chunkier, but they got a floating ass, just like
Thinkorswim.
Thinkorswim too. Yeah.
Huh.
A little bit slower on the uptake, but man, if you're not late in the trade and it's not like on the gas, it's
wow.
One thing to say about like the commissions, they're negotiable. If you don't, it's like the list price on an automobile. Although right now you got to pay above list for cars, but like the sticker price on the car, yeah, anybody can go and pay the sticker price, but you can go in and negotiate to pay less than that. You can call your broker and talk to them just like just about anything else, like your cell phone, like your cable TV service. You can call them and negotiate. It's a lot cheaper to keep a customer than to find a new one, and they actually make more money on the money you have in their platform than they do on your trading. So you can call and say, hey, I can go to this platform and get 40 cents. I'm going to move. Can you match that? I like using your platform, but you're just charging me too much. If you're an active trader, especially most of the brokers, active trader is like you trade like 4 or 5 times a month.
Yep.
If you're trading every single day and you're doing multiple trades in a day, you're an extremely active customer. You're way high on their list as far as activity. Yep. You have negotiating power. You can call and talk to your broker, and hey, if they don't want to come off of 60 cents a contract, go to a different broker.
Absolutely.
Yep. You can save a lot of money, especially if you're doing micro moment where you're doing multiple contracts, multiple trades a day. A difference of 10 cents a contract can make a big deal over the course of the year.
Absolutely.
Yes, because of how active we are, right? We get
absolutely
smaller bites more often.
Yep.
Mm-hmm.
Yeah, that's honestly, I know this is a long answer for your original question, Jim, but that's why I wanted to kind of get a perspective, because we cannot say, oh, this platform has the fastest entries, right? You got fill time, commissions, platform structure. I think I already said fill time. So there's kind of a bit going into it, and then it kind of depends on where you're going to apply it in the market that's going to be more or less effective. Yeah, Mark, do you think that will I guess you mentioned a couple futures platforms at Masters.
Yeah, so
are they separate? You can trade futures on TradeStation and things like that as well too. Right?
So you can, and you can do it on Thinkorswim also, but the commissions are so high. The margin requirements and commissions may not be as high, but it's like $2 plus for the commissions. It's going to be in the realm of futures. It's going to be from $2 to $5 typically for commissions. But the margin requirements on that platform, it's somewhere like $2,200 to $2,500 per contract are going to hold back. We're on the discount brokers have been looking at, it's only $500. So you're going to lock up $500 and be able to leverage that much more efficiently and keep a lot of your profits that way.
Yeah.
Or have a higher return.
I'm sure will change drastically over the next year as well.
Well, it has too, especially those discount brokers, because before it was very prohibitive for a lot of people to do it just based on the cost, right?
Yeah.
Because if you're doing 10 contracts and you have to have $25,000 just tied up pretty much, in margin requirements, and then plus you got to spend another $25,000, $50,000 buying these future contracts, and it couldn't happen, right? It's harder for most people. Now with $5,000, you can open an account, trade it as minimal margin, and turn that into $120,000, $150,000 a year, fairly easily.
You can trade stocks for free,
Yeah, that's true. That's true.
There's been massive changes in the last
that's true.
2 years as far as commissions, like massive. It's I kind of compare it to the scale of data storage.
Yep.
Like a megabyte was something before. Kilobytes were a term that was even used, right? And now it went from like 30 gigs you could get, 30 went to 60, went to like 250, and then all of a sudden it's like terabyte. Everything's a terabyte. You want a terabyte solid state this big? Sure. You need 100 gigs on an SD card. We got you. 164, right? For things that would before like that, the rate of acceleration on that was massive.
Yep. Definitely. The last couple of years, options trading has increased by over 46%. So any indication of where things are going, it's just amazing.
Yeah, absolutely. So basically everything that we're saying is going to be different in a month, but it's in a direction that is better for retail traders, because so much has changed.
Okay.
And I think it will only continue to in the direction of the retail trader.
Especially if you look at platforms like Webull or Robinhood. Webull has like 13 million subscribers, right?
Yeah.
I don't know how many are actually on Robinhood, but they're worth now $100 billion companies. So.
Mm-hmm. Robinhood just IPO'd, right? What does anybody know the ticker on that?
Hood. HOOD.
Yeah.
Hood.
So there are a lot of disruptors, they call them, in the marketplace happening, right? That are changing the way we do business for the little guy. So yeah, we look forward to seeing more of that.
Hey, look, that's like every chart that Robinhood has caused is now Robinhood's chart. That's incredible. I love it.
Yeah, Robinhood's basically doubled its IPO entry.
It's back down to 47.
Yeah, but
it got as high as 70 plus for a while, then it came back down.
Yeah, I see it. I see a peak 85.
Yeah.
Woo.
So they said a lot of the investors, the original investors that were in, up front with them, they cash out a lot of their stuff at that point.
Yeah. Yeah, you'd think they'd have some lockup date.
Yep.
On the initial IPO, but.
Gentlemen, is there any way I can talk to someone on one-on-one about MMT, like phone call, try to talk to a rep on?
Yeah, so Mike Annette, I would say send an email to Mark at micromomenttrading.com or Tim, maybe it might be better, at micromomenttrading.com.
Yeah.
And see if you guys can sync up that way and get a conversation going.
Yep.
And also along those lines, today or tomorrow, we will be publishing the schedule for coaching, one-on-one coaching, that you can go in and sign up and talk to Mark or myself, or really anyone on the training staff that you'd like to talk to. So that is coming, maybe in today, tomorrow. We're just have a little slight glitch in the back end that we're trying to get worked out, but expect that will happen today or tomorrow. So that is there as well as an option for you. But until it's out there.
Yeah. So one-on-one coach is a good thing, right? To definitely learn and figure out what's going on. But this technique, you don't want to do it. You can't figure it out. You want to give your money? I'll pay you 10% return on it.
There you go.
I'll keep the rest.
Yep.
Yeah, Mark's building his own little hedge fund.
Yeah.
No, I can't say that. Not anymore. I'm not licensed right now. Tim's email again is, it's Tim at micromomenttrading.com.
Yeah.
Yep.
That's for Kim.
Yep. And we'd be happy to help you.
Yes. Joe is not available. He said tried calling Joe to no avail. Yes, it is his birthday today, and he is actually in the hospital at the moment. So we're broken leg, and then he's gonna come out swinging, I'm sure. So we'll get back in contact with him, but he's has some healing to do. Want to be very respectful of his space for that time. And I guess anyone on here, please. I know we gave he gives out his phone number a lot. Please be easy with the happy birthday text, or even, hope you're okay. Like just space would be great. I know Cezanne's flying down there right about now, right?
Yeah.
She just got to the airport. So happy birthday to him, but give him some room to heal there.
Yeah, what a way to celebrate a birthday.
Yeah. Yep. Exactly.
So Pat had a question up here real quick. Hi, Randy. I think the E-Trade is easy to use. What's the most we should pay them? I think you're talking about commissions, right? On our transaction, I pay 35 cents through Thinkorswim, and you can negotiate that down, like somebody said, I think earlier. So it depends on how active you're trading and how much you may have in your account. You have some leverage to discuss that with them further. So.
Yeah, I would say kind of the industry average is 50 cents a contract. If you're paying more than that, you need to talk to them, or you need to move, and unless you just really like them. But as Mark said, you can negotiate down to. I think I've heard some people down to a quarter.
I've heard 15 from one person, 15 cents, but they were trading big money and had been for like 5 years.
I've actually got them down to 15 cents over a couple of years. Yeah.
Wow. Very nice. And you were at 35 up until when?
Oh gosh, till I guess about a year ago, and then got them down to 25, and then finally 15. You know, when they finally looked at how much we trade, like, you know, come on.
Exactly. It's frequency and money in your account. Yeah. Frequency and money in your account is the two things, right? It does them a lot of good to have money sitting there. So account size is going to get you pretty far in the first place. Like there are, I would say if you trade every day with a $5,000 account, you're still probably not going to get as far as trading, you know, once every 3 months with 400,000 in your account. It's just part of it, right? Because they know you're not going to put that size into anything, but they want to get you out of cash naturally. So that's, I mean, that they don't make money on, well, they make money on a lot of things, but we won't go into that. Anyways, but yeah, just evaluate, and then the worst they can do also is say no, and then 2 months later you call again, and they've already said no, and it's been, you know, a different amount of time. So there you go.
Yeah, and also, you know, go over to some of the other brokers, get a quote, and just relate that to them. Particularly Thinkorswim, they don't want to lose clients, and you know, I've had to quote other platforms what they would charge me, and typically they'd always meet that price. So, you know, you do have leverage out there.
Absolutely. I just need 1 terabyte on my iPhone. October rollout. Woo! I mean, they're at what? They're at 256. I think is the highest capacity iPhone. So you're not that far. Ricky says, "Get well soon, Joe." Absolutely. Yeah. Thank you, Ricky. Eric, happy birthday. Get well soon. Nice. Well, yeah, maybe I can cut a clip for him and send him a happy birthday.
There you go.
From you guys.
There you go.
Fantastic. Well, we have a potential, I guess, event coming up, Randy. Think that'll still happen?
Well, scheduled is the Cover Call 2-day seminar for next weekend, not the one a day after tomorrow, but next weekend. But Joe teaches that, so we'll have to kind of probably play that one by ear, that he may not be quite up to feeling like teaching. And I usually join in, but I think our baseball playoffs start that day, and we'll have a double header. And so I may not be able to be on too much. Now, if we lose, then I'll be on. But if we don't lose, then I won't. So that may have to get postponed. There hasn't been any discussion about that because this is a new event that Joe just got hurt. But we'll have to see. Keep checking the website, and there'll be any updates on there.
Yep.
Which is www.micromomenttrading.com.
Fantastic. Yeah, the main thing is keep your ear to the ground for one-on-one coaching. We're ironing out all of our profiles and getting everything streamlined for that to get ready to soft launch that. And we're going to do our absolute best. And I'm excited to see where that goes. Well, I want to thank everyone for being here. Keith, thank you for stopping in, gracing us with your presence.
My pleasure.
Yeah, absolutely. Tim and Randy and Mark as well. Mark, the man behind the curtain, Joe would call him, I'm sure.
There you go.
Yep. All right. We will. Yeah, exactly. If anybody wants to get a peek at what next week's topic will be, if you go to our website, there is a link to the Cow Report. Cow Report's been published for over 20 years, and it has our editorial on it every week. It comes out on Friday. The editorial is what we cover the following week on Thursday on this show. So if you'd like to check it out, or during the show, read along with what we're even talking about, you can find that on the Cow Report, which is on our website. Again, free to sign up. So go give that a look. And we will see you all on Thursday at 10 a.m. Central.
Absolutely.
We'll be back.
Yep.
Have a great
And,
weekend, everybody.
Yep.
All right.
And Mark and I will see you tomorrow morning.
Absolutely. In the morning after that.
Take care.
All right.
Good day, everybody. Bye.